going to put this little clip at the front of our videos today because we got a lot of emails saying, man, it was a choppy market. We got knocked out on the 1 hour chart. And, how do you stop getting stopped out? How do you just prevent that? And wow, folks, that's probably one of the biggest questions asked in trading. What I want to start with first is notice this little slide I have here. You lose some really big and you win some. And it's amazing how the losers just are so big, right? They're huge. They're always right in the forefront of your mind, and they're bigger than any of the wins you think possible. Over the last couple of weeks, if you go back and review the videos, we had winners that ran 70, 150, 140. We had several sessions of those, just awesome. We had some great trading sessions, some where there were no losers. Then we had some where we got a loser, and then we turned around and got us back in and got in the market. And then last night the market just opted to, on the 1 hour basis, just spike us out. So I think it's really important to realize, number one, you cannot stop and prevent stop outs from happening. If that is your goal, wrap it up, close it up, and give your money to somebody to manage because it's not going to happen. To effectively learn how to trade and trade management and learn risk, that's what you can do. That's how you come out the winner at the week's end, at the month's end, and at the year's end. You cannot stop losers from happening. So you can filter them down to a certain point, but you cannot prevent them. And that's probably one of the biggest fears that everyone has. Well, I don't want to lose. Well, neither do I. But again, I've talked about this before. I love losing. It doesn't happen a whole lot, but I love losing because I know that the next winner is right around the corner. So look at how we've set this text up. This is how most people consider losing. It's just huge. It's all encompassing. It's right in front of their mind. They can't get away from it. And winning, well, it's this little thing that might be down here, might happen, and well, may never happen to me again because I've had a couple stop outs. Stop it. Just stop it already. Stop thinking that way. You have a high probability trading system. It's going to pay you over the long term. Don't let some price action over a few days throw you off your plan. So I really hope that you take this information to heart, and especially as you review some of the videos and we give some commentary on the upcoming videos that we're going to look for the trading examples as well as looking at some of the stop outs that came in the last session that we did. So I really hope you benefit from this information, and we hope you enjoy the rest of the video. All right, let's take a look at the dollar yen for the upcoming November, the 11th session. Again, daily chart. Look how small those candles are. Again, that really dictates to us how we have to aggressively get after our profit. Take more of that lot and that position off for a smaller amount of pips. Do let some run though. Move your stop aggressively. Look at that for 4 days. Last 1, 2, 3 days. Just not much movement. Not much we can do about it. We can only manage, what we can do with the market. You can't bake cake really if you don't have any eggs, right? You got to make something else. You're gonna have to make, I have no idea what you just make, flour and water, maybe some flatbread. But you can't make anything if you don't have the right ingredients, and the market is the right ingredient. If it's not there, you can't make steak and eggs if you don't got no eggs. How's that? Can't make steak and eggs if you don't got no eggs. You just got to have steak. Steak's good, that's all right. Look at this choppy, whippy mark at price action, just insane. Now, price is still, look at that tight range, really, really tight. From yesterday when we were looking at some of these ranges and these lows, we were way down here. We got sucked into this higher, the buy that we had in here, and it did fund. It didn't fund with much, and then it was stopped out. So the dollar yen, ooh, at least we didn't. We made a little bit from the losses that we took on the euro and the pound dollar. So that's that's okay. Again, very, very tight range that we're looking at overall here on the 4-hour. MACD's closer to the waterline but flat. Below the waterline, bias to the downside. That's what you got to read. That's how you read that. Again, MACD here, flat. Still below the waterline, bias to the downside. What we want to keep our eye on, because this is a pretty good trend line, we want to look at this channel that we have in here and this trend line. All right, we're going to keep an eye on that. Indicators not giving us a whole lot of love. When price is like this, indicators out the door. Really don't help us much. They do right before breakout because certain indicators can give us a heads up that we're going to be sucked into the vortex going the wrong way. It's a little move a friend of mine coined. We were like, yeah, where we go, we get sucked into that every time. He's like, yeah, it's a vortex. And usually they'll spike price one way real hard and then you'll see it go the other, and all these people that get chumped into that one first move get stopped out. But there are indicators to help you measure that. Again, looking down here, even on the 30-minute chart, what a challenge. Look at that indicator, dead, 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 dead. This is messy, this is ugly, and that tells you and conveys to you that price is messy and ugly and better for you to stay away from it. So let's take a look. What will we consider doing here on the dollar yen? On the 1 hour chart, we'd consider a sell below this level here. On the 1 hour chart when it closes outside of this lower support level. The other thing that we'd consider is a close above this resistance trend line right here on the upper side on the hourly basis. On a close on a 1 hour above that, then we consider that, because that's a long-term, fairly long-term trend since last week, that when it popped up here, it's given it to us. So we'd consider that. The other thing we would consider is a close on the 60-minute above that point, above this resistance level. So again, very, very tight range. The best thing about these tight ranges is once it comes out of there, it should move very nicely for a while. So again, as we've said to people in the rest of the videos, there's no way to stop and prevent stop outs. Please, if you don't believe me that you are on the hunt to try to eliminate stop outs, do me a favor. Do I write with your, if you're left-handed, like myself, write on your chart on a piece of notebook paper. Do I believe I can eliminate stop outs in my trading? Put the pen in your right hand. And then as scribbly and ugly as you can write with the right hand, write the answer to that question. Why? It's an old psychological trick. It slows you down, doesn't let you lie to yourself, and it'll let you see the truth. So there you go. If you think you don't believe that you can eliminate, if you don't, let me say this right. If you think you can actually eliminate stop outs, that will tell you with pretty much a 70-80% accuracy. And if you're sitting there going, I don't believe I can eliminate it, but secretly are, it'll expose it to you. So give it a shot, and those are the trades we're going to be looking for in the upcoming November the 11th session for the dollar yen. We're going to be looking for one sell and possibly two buys.